This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices steadied on Wednesday after 2 days of declines as investors weighed OPEC Plus plans for a larger output hike next month and the outcome of a U.S. government shutdown that could impact economic activity and fuel demand. Brent crude futures for December delivery rose 25 cents to $66.28 a barrel by 0643 GMT. U.S. West Texas Intermediate crude rose by 22 cents to $62.59 a barrel. On Monday, Brent and WTI both settled more than 3% lower, their sharpest daily declines since August 1st. On Tuesday, they each fell 1.5% further.
U.S. crude oil production rose to a fresh monthly high of 13.64 million barrels per day in July, up 109,000 barrels of oil per day from the previous record in June, data from the Energy Information Administration showed on Tuesday. Oil output from top-producing state Texas rose to 5.8 million barrels of oil per day in July, the highest since October 2024, while second-largest producer New Mexico hit a record 2.28 million barrels of oil per day, the EIA data showed. Gross natural gas production in the U.S. lower 48 states also hit a record high of 121.62 billion cubic feet per day in July, surpassing the previous record of 120.57 billion cubic feet in June, the data showed.
Moving on to the top news in the energy sector.
Spot premiums for Middle East crude oil unexpectedly slumped and rebounded at the end of September despite stockpiling demand from top importer China, as there were ample supplies in Asia from Russia, Gulf producers and other regions, traders said. The price volatility could put Saudi Arabia in a quandary, they said, as the world's top exporter is expected to raise official selling prices next month for November loading supplies to Asia. A total of 1,204 Dubai partials were traded in September during the S&P Global Platts market on close process, the pricing agency said. This led to the delivery of 49 cargoes, equivalent to 24.5 million barrels of oil, including a record 42 Abu Dhabi Upper Zakum cargoes, 4 Murban cargoes, 2 Qatari Al Shaheen cargoes and 1 Oman cargo, S&P Global said.
Russia has imposed a partial ban on diesel exports and extended an existing gasoline export ban until the end of the year, the government said on Tuesday. Russia is facing fuel shortages after a spate of Ukrainian attacks on its refineries. The measures were expected, as Deputy Prime Minister Alexander Novak had given advance warning of them last week. The government said in a statement that it continues to work to maintain stability in the domestic fuel market. The gasoline export ban applies to all exporters. Next, we have the top news in metal markets. London copper edged higher on Wednesday, driven by supply concerns after output in top producer Chile fell the most in more than 2 years in August. 3-month copper on the London Metal Exchange gained 0.52% to $10,322 per metric ton by 0708 GMT. Markets in China are closed from October 1 to 8 for the National Day holiday. Chile's output fell 9.9% year-on-year in August after an accident at Codelco's flagship mine on July 31. The company, the world's top copper producer, was forced to halt mining and smelting operations, which knocked 33,000 metric tons off the facility's forecast output for 2025.
Gold prices surged to a record high on Wednesday, driven by investor demand for safe haven assets after the start of the U.S. government shutdown and as soft labor data bolstered expectations of Federal Reserve rate cuts. Spot gold was up 0.1% at $3,860.13 per ounce, as of 0613 GMT, after hitting an all-time high of $3,875.32. U.S. gold futures for December delivery gained 0.4% to $3,887.40. The dollar index fell to an over 1-week low, making greenback-priced gold more affordable for overseas buyers. Wall Street futures slipped.
We will now look at the top news in the agricultural sector.
Chicago soybean futures slid for a third consecutive session on Wednesday, dropping below $10 a bushel for the first time in 7 weeks, as lackluster demand for U.S. supplies and the harvest of a bumper crop pressured prices. Corn lost more ground, while wheat slid to its lowest since mid-August after the U.S. Department of Agriculture released a quarterly report showing bigger than expected inventories. Soybean prices are testing lows we have not seen for several weeks, said one oilseed trader in Singapore. We don't see a recovery in soybean prices as long as China remains out of the U.S. market.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.